Chip maker Broadcom is in advanced talks to purchase cybersecurity company Symantec, as Broadcom looked to diversify away from semiconductors. Shares of Symantec surged 22% on news of the $15 billion deal, whilst Broadcom fell 4%, knocking more than $4 billion from the company's stock market value. The deal would expand Broadcom's move into software a year after its $18.9 billion deal to buy business software company CA Inc. It also follows on from their failed bid last year to buy mobile chip company Qualcomm for $142 billion, which was blocked by the US government over national security issues. Broadcom has now moved its headquarters from Singapore to California to avoid similar issues to those faced with the Qualcomm deal. The CEO of Broadcom, Hock Tan, has built the company through a series of deals, starting with its acquisition that he oversaw when head of Avago Technologies in 2016 for $37 billion, bringing the two companies together under the name Broadcom. Prior to acquiring Broadcom, Avago bought up LSI and Emulex. Symantec was one of the early leaders in cybersecurity, claiming to sell products and services to 350,000 enterprises and 50 million people. They are now, however, facing growing competition, as well as several other challenges. They are currently being investigated by US regulators over an accounting irregularity, a claim made by a whistleblower that led to a board-level investigation into unspecified financial issues. This investigation has also caused a number of key staff departures, including that of CEO Greg Clark, who stepped down in May. Last August, Symantec announced that they would cut 8% of their global workforce, following a downgraded revenue forecast. These recent troubles have all hit the antivirus software maker's share price, seeing it fall by a third from its high of just over $34. Malaysian-born Mr. Tan has a reputation for buying companies that have no obvious overlap with his existing businesses, pursuing financial and operational goals more commonly found in the world of private equity. The purchase of Symantec would give Broadcom the opportunity to turn around a large, underperforming software company. Symantec spent $7 billion on acquisitions in 2016, buying enterprise security firm Blue Coat Systems and LifeLock, a company that protects against identity theft. These deals failed to rekindle growth, and this failure contributed to the revenue forecast downgrade and the departure of CEO Greg Clark. Symantec's weak growth and strong free cash flow, which rose to $1 billion last year, have also brought interest from private equity firms. The activist hedge fund Starboard Value own more than 5% of the company and also have a seat on the board.